Well, it looks like the dollar is set to weaken this year. We don't really know. It's very difficult to predict the long-term price performance of currencies, but if the dollar weakens this year, that's a tailwind for Bitcoin. Now, I've mentioned technicals, and I think the most important technical to watch is Bitcoin's price relative to its 200-day moving average. Now, Bitcoin, you may wonder, does it make any difference? Does Bitcoin behave differently when it's above or below its 200-day? Well, the 200-day moving average for Bitcoin right now is around 5,000. So Bitcoin still needs to rise about $1,000 before it's above its 200-day. But take a look at this chart. Since 2010, whenever Bitcoin is above its 200-day, its average 6-month gain is 190%. It basically triples every 6 months. When it's below its 200-day, its 6-month gains are 1/10 when it's above it. So in other words, Bitcoin very much trades within technical, or follows technical signals pretty closely. And that makes sense. Cryptocurrencies don't report earnings. They don't have an investor relations department, so technicals play an outsized role. But what this chart's saying is the public, or most investors, are going to turn bullish once Bitcoin gets back above its 200-day moving average. So just keep that in mind. The 200-day moving average is 5,000, and Bitcoin's at 3,900. This chart here shows you at different prices of Bitcoin, if it holds these prices, when will Bitcoin cross above its 200-day moving average? And according to this, if Bitcoin stays at around 4,000, it's going to cross its 200-day sometime in June. That's the middle of the chart here. So keep that in mind. For anybody who does technical analysis, the 200 days is a big deal. That could happen within the next 4 months. Again, another reason to turn positive on 2019's outlook for crypto. And finally, I think there's a lot of positive catalysts on the infrastructure side. I mean, first of all, I think this was a very pleasant surprise. JP Morgan launches their own cryptocurrency. Granted, it's permissioned, but it is essentially digital money. So remember, this is a big deal. JP Morgan has gone from saying, blockchain makes no sense, to actually launching a cryptocurrency. We have pensions investing in crypto. Again, that happened just recently, but again, we had the first pension funds actually allocating money into the crypto market. You have to keep in mind, pension funds and endowments really help drive the growth of any asset class. They're the engines behind why private equity has blossomed, or why venture capital has bloomed, and also why hedge funds actually grew. So these, the decisions made by pension funds and endowments are critical to the growth of an asset class. And finally, BACT is going to launch later this year, and I think BACT is going to be quite useful. It's really going to improve the plumbing between traditional financial architecture and the crypto market. So in short, I don't think you should be bearish about 2019. And just as a reminder, this is a chart we published in 2017. Bitcoin makes all of its gains in 10 days in any single year. Okay? So even though there's 365 days to own Bitcoin, the performance comes in a very short period of time. The dark blue bars here show you the average return of Bitcoin if you didn't own it for the 10 best days in any single year. On average, you'd lose 23% per year. So in other words, all of the Bitcoin return occurs in those 10 days. So unless you're great at timing, I don't think you should be trying to time this market. Okay, so let's jump to digital assets are useful. I just want to see how much time I have. Okay, so first of all, I think these are some quotes, and I'm just putting them up here to remind you that anybody who is involved in technology or new technologies, even those who invent it, really never know the future. Now, I grew up as an equity research analyst covering the wireless industry. I started covering that industry in 1993 when there were only 34 million cellular phones in the world. Today there's 4.5 billion. So I followed a market that grew by 1,500x. But I put some quotes here from technology pioneers. So in 1977, Ken Olsen, who founded Digital Equipment Corp., said there's no reason for any individual to have a computer in his home. And I think that might have been true in 77, but of course that's not true today. In 1981, Marty Cooper, who invented cell phones, and that's very close to my heart because I spent over 17 years following that industry, he said cellular phones will absolutely not replace local wire systems. Again, he made that prediction in 1981. He obviously had no idea how important cell phones would become. And then, of course, in 1992, Andy Grove said that the personal communicator in every pocket is a pipe dream driven by greed. So, the point is, you don't want to be one of these people. And again, one of the keys here is that these folks didn't understand how demographics really affect the adoption of a new technology, or in this case, cryptocurrency. So where do we stand today? I mean, Bitcoin's very useful. I mean, first of all, let's just think about blockchain volume, or the volume on the blockchain. Bitcoin did about 1.3 trillion of transactions. That's 2.5 times the size of PayPal, and it's 7 times the size of Discover. I mean, it's in a few years, Bitcoin's going to be processing more transaction volume than Visa. So clearly it's useful. And I've mentioned this before, but cryptocurrency exchanges, which is really where a lot of the activity takes place, so this is not on-chain but real trading, you can see, BitMEX, which we estimate earned about $1 billion last year, would rank as the 3rd most profitable exchange in the world, of any market. And we think there's many use cases for crypto. Again, I don't have time to cover this all here in my presentation, but I think the key here is people who are skeptical of cryptocurrencies are skeptical because they think the traditional financial system works well. Well, it turns out that the traditional financial system works well if you're rich. But more importantly, the traditional financial system actually is quite expensive to operate. And so this is where crypto is useful. Crypto replaces the trust component on traditional financial systems. That trust is allowing banks to earn trillions of dollars a year. So that's the value capture. And second, crypto would optimize how the financial system works, so we call that optimizing working capital. Today, 14% of all global GDP is essentially tied up on balance sheets in order to keep the financial system liquid. That's a huge amount of waste. And of course, we think crypto actually works quite well as a store of value. But let's just think about crypto as replacing the cost or saving money in the traditional financial system.